Hi, this is Simi Lolu, and in this video we're going to dive deeper into DeFi, and we're going to do this by actually going into the liquidity side of things. This is the meat and potatoes of DeFi. DeFi meaning decentralized finance. I'm going to transfer some funds over into my MetaMask wallet, and I'm going to use Polygon's DeFi platform, Quickswap, to provide liquidity into one of the liquidity pools. So a liquidity pool just refers to a pool of crypto tokens contributed by users like you and me, which are locked up by smart contracts and are used to enable trades between assets. Now, decentralized exchanges like Uniswap, Quickswap, or PancakeSwap and the like tend to offer incentives to those who deposit into the liquidity pool. For example, in Uniswap, if a person wants to participate in the liquidity pool for the ETH USDC pair, then they would have to deposit both the coins to the same value. So that means, say, $1,000 of USDC and $1,000 of Ethereum. The user is incentivized by receiving a portion of the trading fees of that particular liquidity pool. That is, if the fees charged by the exchange on a single trade is equal to 0.3% and the total value of tokens deposited by the user into the liquidity pool amounts to 0.05% of the total pool, then the person would receive 0.05% of the 0.3% trading fee. That comes to 0.015%. If then the daily trading fee is, say, $20,000, then you as a liquidity provider would receive 0.015% of $20,000. That comes to about $3 a day or $90 a month. You get the point. So now we're going to start this whole process by going to Beefy Finance. Beefy Finance is a yield aggregator that allows its users to become yield farmers effortlessly. So users don't need to compound their funds periodically, since you can just set and leave your funds in the yield farm. Here we are on Beefy Finance. We'll launch the app. And the first thing we want to do is to connect our wallet. So I'm going to click Connect Wallet. So it's connected to the Ethereum mainnet, but I actually want it to connect to the Polygon mainnet. So that's this one, the Matic mainnet. Okay, and there's my Matic. Okay, so this is the Matic that I want to put into liquidity pools. I was getting a decent rate in my CeFi wallet, so I was using Celsius, but I decided to move half of my Matic out of Celsius wallet just to diversify a bit. It's always a good idea not to keep all your eggs in one basket, and so I'm taking half of that out and I want to place it onto this DeFi platform. The next thing I want to do is I'm looking for a Matic and a stablecoin pair. So I'm going to click on the Polygon network. So those are the only pools that it'll show up. And then I'm going to scroll through, literally like I'm shopping or window shopping. So what am I looking for? Well, first of all, I'm looking for a Matic and a stablecoin pair. And of course, the APY has to be a decent amount, hopefully an improvement on what I was getting in my Celsius wallet. The whole goal is to diversify, also to get a decent yield. Now I see this one, USDT and Matic. This looks interesting. It's giving me a 17% APY, which is quite a bit better than what I was getting in my Celsius wallet. So the interest I'll be getting the interest I was getting in my Celsius wallet was about 10% less than this. So that's a good double. So basically, I'm getting double the rewards for the same amount of money. Okay. So this loan looks good to me. And also the safety score. So this is just a value that Beefy Finance puts out to let you know how safe a setup it is. For instance, if we look at this one, Watch. I haven't even heard of this coin. So Watch and Matic. Of course, there's no stable coin in this one. And it shows right there with the safety score a little less than with my stable coin and Matic pair. So I'm going to go for this one. Okay, so this is the total value locked. It just shows you how much is locked away in this particular liquidity pools. So this shows a breakdown of how they came about this 17.23% APY. So this is a yearly rate and this is the daily rate. So literally, if I calculate 0.0449% of whatever I put into this pool, that is exactly what I will get on a daily basis. Okay, so moving further down here, we are deposit. So I want to deposit my Matic. So I'm going to highlight that and click on add liquidity. And then it takes me to Quickswap. So Beefy Finance now directs me to Quickswap. So this is where I deposit what I've got in my wallet. And there it is, right there. So if I click on the maximum, okay, so this is what I have available in my wallet. I have 1,012 Matic tokens, and it basically tells me what I need to do in order to be able to deposit into this particular pool. So it says to balance the liquidity pair, I need to swap pretty much half of my available funds and swap it into USDT. After I've done that, I'm going to add liquidity. And once I do that, I get an LP token, which is pretty much a receipt just saying exactly what it is I have contributed to this pool. Okay, it'll then deposit the LP token into the Beefy vault, and it'll return unused trace amounts of USDT and Matic back to my wallet. Okay, so that's good to know. And here it gives a breakdown of how they come about the 4.5% performance fee. And here the performance fee is already subtracted from the displayed APY. Okay. So once I've done all that, then I'll deposit. So I have to go and I have to swap 506 Matic into USDT. So in order to do that, I'm going to go to Quickswap. Okay, so over here on Quickswap and clicking on the swap tab, what I can do is it tells me my balance again. So I'm going to swap 500 Matic. I think it recommended me swap, I think that was 506, but I like whole numbers. So I'll swap 500 Matic, and I want it to swap 500 of my Matic for USDT. Okay. Okay, so there it is. So now let's see what it's come up with. So it's going to swap 500 of my Matic for $680 worth of USDT. It is going to charge me a fee, which is 0.30% of what goes to liquidity. It does charge a 0.3% in provider fees. So those are the trading fees. Okay, so I'm ready to swap. And it wants me to confirm the swap. Okay, so it's giving me a price update, just a slight change in price. I accept that. And I confirm the swap. Now we're waiting for confirmation. So now my MetaMask wallet wants me to confirm the swap, the gas. So this is an estimate, but it gives me an idea of how much gas I'm going to pay. Now, if the price of Matic right now is, I think it's like $1.40. Well, this is way less than $1. I don't know. This is just like pennies. Here I confirm. And this is the total amount that it wants to deduct from my wallet. Okay. Okay, so looking on MetaMask, I can see my 512 Matic. I had double this, and then I swapped half of it. So I swapped 500 of it into USDT. I don't see my USDT here. Let's look under assets. Okay, I only see my Matic. I don't see my USDT. That's not a problem. So I'll just click on import USDT. And there it is. So that imports that into my wallet. So here I now have my 2 tokens, which I want to contribute to the Matic USDT liquidity pool. So I'm going back to Beefy Finance. And now I'm ready to add liquidity to the pool. Oh, I don't want the maximum. So I want 500. So I only want 500 of that to add to the liquidity pool. Okay. So I'm going to put in 500 Matic. Gives the equivalent USDT. I'm going to approve the USDT. So we're going to approve this through the wallet. We're going to confirm. So this is basically what we're doing. We're adding liquidity to the pool, and this is what we're going to earn in so doing. Now we've approved that amount, we're now going to supply it to the pool. And this is the LP token that I'm going to receive in so doing. Every time we give confirmation of permission from our wallets, we do get charged a certain amount of gas. But in this case, because we're working off the Polygon blockchain, we're not paying obscene amounts as we would if we were doing this on the Ethereum blockchain. So I'm happy to confirm this. It's been submitted. I can close that. Okay, so this is all done now, and looking on my dashboard, I see that I now have my LP, my USDT Matic LP token, and I have the balance of USDT and Matic still left on my wallet. So the deed is done. And back in Quickswap, if we go to the pools, there we'll see what we have just deposited, the Matic USD pair. We click on manage, and basically just shows me the LP tokens that I have, how much of each of the coins I contributed to the pool, and what I've contributed to the pool constitutes 0.02% of the whole pool. Now, of course, if I want to add more to the pool, I'll just click this. If I want to remove from the pool, I'll be clicking remove. Okay, going back to Beefy Finance, we see it now shows up exactly what I have deposited into the liquidity pool. Now, if I click on this here, and this is exactly it. So these are my So here are my LP tokens. And if I click on max, in order to get more yield out of my liquidity, so I'll click on deposit all. And again, I have to grant permission, confirm. Okay, it's telling me exactly what I'm going to pay in terms of gas. Again, that's a minimal amount. Click confirm. And we see here that the confirmation is pending. Of course, this will... Okay, and so here we are. I have successfully deposited my Matic LP token into the vault. Okay, so then my receipt, so to speak, are in Mu tokens, and it says here they are the interest-bearing tokenized proof of my deposit. I will need them to withdraw my funds and so on and so forth. So we'll close this. Okay, so my LP tokens no longer show up here because they have been deposited into the vault. Okay, so now that is done, and going back to the Beefy Finance homepage, we see here on the dashboard a record of my total deposits, what I'll be earning on a monthly basis, and here, right here, is my daily rate. Well, that's all for now, folks. I hope you can now see how you can begin to earn passive income through liquidity pools. I'll see you in the next one.